Hi, this is Professor Cataldo, and I'm going to spend a little time on the journals or the original books of entry in a financial accounting system. This is designed for an introductory course, and these PowerPoints are going to focus on the journals and how the monthly balances are transferred to the general ledger. It's an extremely mechanical process, and it's not usually fully developed in introductory financial accounting texts. And in fact, I'm not going to develop it too terribly fully. I'm going to explain it probably a little bit more in depth than they do in an introductory financial accounting course. First, this is a flow chart I developed. Uh, you want to think of the journals as Excel spreadsheets that periodically summarize large quantities of financial data. If you follow this flow chart, it will work. These are the different journals or original books of entry. So first of all, does the transaction involve cash? If yes, you're going to use a cash receipts journal, a cash disbursements journal. Those journals are required for both cash basis and accrual basis accounting. If the answer is no, then you are either a cash basis taxpayer or you're preparing cash basis financials and you're not recording accruals like receivables or payables. And so it's not a problem. You're using a cash basis system. If you are an accrual basis taxpayer or preparing accrual basis financials, you're going to have a sales journal for your receivables. These are non-cash sales, and you're going to have a journal for your purchases. These are non-cash purchases. If it's a cash sale or a cash purchase, look at the left-hand side. It's going to be recorded in the cash receipts and cash disbursements journal. Again, just follow the flow chart, and it will work for you mechanically. Now, the general journal is just for stuff that doesn't fit anywhere else, and I'm going to go through that. This is an example on the right of a cash receipts journal, and right below it a cash disbursements journal. And these are just Excel spreadsheets. And in the cash receipts journal, the first column is going to be debits to cash. All debits to cash will be recorded in this journal. All credits to cash will be recorded in the cash disbursements journal below. Notice the first column in the top, the cash receipts journal, is a debit to account number 100. It is cash. Down below, cash disbursements journal, the very first column is a credit to account 100 cash. Now, these cash receipts and cash disbursement journals are not used to teach you financial accounting. Instead, we write all of these journal entries in what is referred to as general journal form. But look at the left-hand side. Could you imagine a firm with thousands of transactions and recording all of those transactions in general journal form? You'd have to go through and add up all your debits to cash, add up all your credits to cash. Why not just record those original book of entry, in a journal that is specialized for cash receipts, upper right-hand side, and cash disbursements, lower right-hand side. And that's what we do. Again, we use general journal format to teach you accounting. We're primarily concerned that you understand the mechanics of the debits and the credits. However, on the job, cash receipts journals and cash disbursements journals are used. But in addition to the cash receipts journal and the cash disbursements and the general journal, which are used in a cash basis system of accounting, if we want to record accruals, if we want receivables and payables in our balance sheet, and if we want to use accrual basis accounting, we are also going to have a sales journal and a purchases journal on the upper right-hand side. The sales journal, the first column is going to be debits to accounts receivable. Now let's say you had a sale, part of it was cash, part of it was credit or on account. You have to follow the flow chart. The fact that there was a debit to cash means that entry is recorded in the cash receipts journal on the far left-hand side. Once again, refer to the flow chart. The flow chart will work. The purchases journal is to record all cases where credit was extended to us and we have trade accounts payable and no cash was involved. And what do we put in the general journal? Everything that's left. just the leftovers. Now, this is a fair little bit to digest, and I'm describing this in a fashion that would be used in a manual accounting system. And you have to understand how it works in a manual accounting system, and then we move on to how it's handled today in computers. And pretty much everyone uses a computerized general ledger package today. It just doesn't make sense to do this stuff manually. But you still have to understand the journals are the original books of entry, and use the flow chart that I provided to you. Print out the flow chart. It's going to be very helpful. So let's assume I'm preparing financials every month. I'm going to prepare a cash receipts journal every month. Those are all my debits to cash. A cash disbursements journal every month. Those are all my credits to cash. A sales journal every month. Those are all of my sales on account that it did not involve the receipt of cash. And a purchases journal. Those are all my purchases on account that did not involve cash. If cash is involved, it's going in the cash receipts or the cash disbursements journal. It has to. Anything that doesn't fit in any of those categories, that's going to go in the general journal. That's where the leftovers go. So if I've prepared cash receipts, cash disbursements, sales journal, purchases journal, general journal, and it's month end, I merely transfer all those debits and credits for all those accounts to a general ledger. The general ledger, think of a binder, a 3-ring binder, with a separate page for each and every account in your chart of accounts. And if you haven't covered chart of accounts yet, you need to cover that first. Go through this PowerPoint a few times, digest it, think about it. Each and every journal is nothing more than an Excel spreadsheet, where the general journal, of course, has all the transactions that do not fit in the original books of entry that exclude the general journal, where we store all of our like transactions. Thank you.